Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 7th, 2024, and we're diving into Air Products' latest earnings report. Joining us is John, Senior Analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Air Products has just released their fiscal 2024 fourth quarter and full year results, and there's a lot to unpack, from their impressive earnings growth to strategic divestitures.
Revenue and profitability overview. Let's start with the top line. Air Products reported a net income of $3.9 billion for fiscal year 2024, which is a 65% increase compared to last year. John, can you shed some light on this?
Absolutely. The significant increase in net income is largely attributed to a $1.2 billion after-tax gain from the sale of their LNG business. Despite a 4% decrease in full-year sales to $12.1 billion, the company managed to boost its GAAP EPS by 67% to $17.24, thanks to strategic cost management and favorable pricing.
And what about their quarterly performance?
In the fourth quarter, Air Products achieved a GAAP EPS of $8.81, up 186% from the previous year. Their adjusted EPS also saw a healthy increase of 13% to $3.56, driven by higher volumes and positive pricing.
Strategic initiatives and divestitures. Air Products has been active on the strategic front, particularly with the sale of their LNG business. How does this fit into their overall strategy?
The divestiture of the LNG business for $1.81 billion aligns with Air Products' focus on their core industrial gas and clean hydrogen sectors. This move not only provided a substantial gain, but also allows them to reinvest in growth areas like hydrogen infrastructure and air separation units in the U.S.
They've also announced a significant green hydrogen agreement. Can you tell us more?
Yes, they've signed a 15-year agreement to supply 70,000 tons of green hydrogen annually to Total Energies, starting in 2030. This is a strategic step towards decarbonizing refineries and aligns with their sustainability goals.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. How has Air Products managed to improve its margins?
Air Products has focused on operational efficiencies, achieving a fourth quarter adjusted EBITDA margin of 44.1%, up 460 basis points. This improvement is due to effective cost management and a favorable business mix, despite inflationary pressures.
Looking ahead, what is their guidance for fiscal 2025?
For fiscal 2025, Air Products expects adjusted EPS to be between $12.70 and $13. They also plan capital expenditures in the range of $4.5 billion to $5 billion, indicating continued investment in growth projects.
Key takeaways. In summary, Air Products has delivered a strong performance with significant earnings growth and strategic divestitures. Their focus on core businesses and sustainability initiatives positions them well for the future. John, any final thoughts?
Air Products is clearly on a solid path with their strategic focus and operational efficiencies. Investors should keep an eye on their hydrogen initiatives and capital investments as key growth drivers.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Air Products' performance in the comments below.